Right, good afternoon then everyone, as we are at the end of the second week of trading in the new year. We'll flick across the calendar and have a quick look at what is going on across the board, and a pretty boring week in financial markets really. You can see economic data pretty light over the first half of the week. Monday, Tuesday, Wednesday, nothing really of note across the major economies across the world. CPI, the main focus of attention yesterday, and a bit of a beat pretty much across the board. When we have a look at inflation, the headline figures year over year, month over month, both beating consensus. 3.2 up to 3.4, well 3.1 up to 3.4, but beating the consensus of 0.2%. Consensus 0.2, actual 0.3, up from 0.1 over the month of December. So strong inflation prints from the US, certainly in terms of the headline figures. The core CPI print year over year dropped slightly from 4, but not as much as markets had anticipated, so still up from the consensus of 3.8 and bang in line with previous and consensus for the month over month core CPI. So it's kind of sticky inflation, or inflation continuing to be a little bit sticky, but the path to get inflation under control was never going to be linear. It was never just going to be one straight line down, so a bit of a bump in the road, but ultimately I have to imagine it will still turn lower as we get on through this year. So a bit of a reaction yesterday in markets, but nothing too severe. We'll have a look at that once we get around to some charts. Disinflation in China continues, minus 0.3%. A bit better than consensus, but ultimately the Chinese economy is still struggling. It's a little bit tricky out there, though. With weak economic data, it continues to underpin the prospects of stimulus or further stimulus from the Chinese. From the Chinese central bank and the Chinese government. So we'll keep an eye on that as we go on through the rest of the year. GDP figures this morning out of the UK. 0.3% growth over the month of November. Not too bad from the UK, considering it was a contraction in October. So with that plus 0.3%, hopefully if December is okay with all the holidays, all the whatever goes on at Christmas, or everything that goes on at Christmas, you'd like to think we will probably avoid a contraction in Q4 of this year, or last year should I say, from the UK. PPI, producer price index, out today, minus 0.1%. Now PPI is a bit of a front runner for CPI, so the fact that comes in minus 0.1% does help to cool down any fears from yesterday's CPI prints. But you have a look at charts across the board. You can have a look at currencies. Your Aussie, Kiwi, Euro and Sterling have done nothing this week. Dollar Swiss, Dollar CAD done nothing this week. Dollar index as well. A bit of upside in dollar yen, so a bit of weakness in the yen as the rest are sideways, so not much to see here across the US dollar. We'll have a look at yields. You can see the 10-year yield pretty sideways, with the 2-year yield coming off a bit towards the back end of yesterday into today, which is an interesting, a bit of a steepening of the yield curve, but certainly 2-year yields, shorter dated interest rates pushing lower, while longer dated interest rates remain the same. So that's a bit of a positive for the economy, which is lending a bit of support to the two stocks in recent trade. But this week it's been another pretty positive week for stocks. You can see the S&P and the Nasdaq pushing higher. Dow Jones is just all over the place. The Russell's a bit all over the place. The DAX, the Euro stocks and the FTSE again all over the place. So pretty difficult trading conditions across the duration of the week. Where you did, or where there is a bit of positivity, is in Bitcoin. Now, Bitcoin has been a bit kind of all over the place, kind of back end of this week. Monday was a pretty solid day in terms of Bitcoin, but the SEC has approved the trading of Bitcoin ETFs. So companies like BlackRock now offer ETFs in tracking the price of Bitcoin. Now $4.6 billion went through yesterday went through these ETFs, or volume traded on Bitcoin went up $4.6 billion over the course of yesterday on the first trading day of these ETFs. Now what that does for the price of cryptocurrencies and what that does for the cryptocurrency space in general is, okay, it's a positive. It's a step in the right direction for, maybe not regulation of the currencies, but certainly a regulated way of trying to invest. If we've been looking at markets, everybody will know about the FTX situation, with them losing customer funds or client funds. Also, Binance have had issues, so in a big sell-off on Bitcoin or any cryptocurrencies, they kind of halt withdrawals, and you cannot withdraw any of your money out of these companies. With the likes of BlackRock taking on investors from Bitcoin. It's a little bit more of a kind of regulated way of investing in it, as such as, you know, if you need your money back off BlackRock, pretty sure they'll be able to pay you back. So that is one positive, but ultimately it doesn't change the currency itself. It doesn't change it and make it useful in day-to-day life. You cannot use it as a currency. You cannot purchase things for the most part. Doesn't increase any of the prospects around a store of value. It's still too volatile to be a store of value for people. Also, the technology that is behind cryptocurrencies, we are no further along in introducing that technology into day-to-day life. So yeah, okay, you know, it's a bit easier to get your money out if you invest in Bitcoin. It opens up the investment in cryptocurrencies to more people than it had previously, which is one positive, but ultimately it still doesn't change much of the issues surrounding it. But you know, we haven't seen much movement off the back of that, really, because it was expected in markets. If we go back to this daily chart, you can see the way Bitcoin has moved over the last number of months and over the entirety of last year. But certainly October, November, December were big upside months in cryptocurrencies across the board, and that is all due to the fact that the SEC were considering approving these ETFs. So yeah, positive, but I think the positivity from that was priced in before the decision from the SEC. So, you know, ultimately it's no surprise really to see no movement. No surprise to see no movement across Bitcoin post release of that statement. So we'll see how that plays out going forward, but a bit of a buy the rumor, sell the fact, you can probably imagine. You get a bit of action today in gold pushing higher. If I bring this down to a more intraday chart, you can see hourly time frame, gold pushing higher aggressively, likely due to the fact that yields are pushing lower. The 10-year yield is making an attempt through these lows, which is interesting. 2-year yield, you know, getting hammered in recent trade, likely due to the fact that PPI has come in below zero and also below consensus. So yields pushing lower increases demand for the zero yielding asset of gold. Where that leaves us into next week, we will have a look at on Monday. But for today, pretty difficult trading conditions. Oil, nearly forgot about oil. Oil's had a positive week. A number of tensions in the Middle East over with the UK and the US approving missile launches against the Houthi in Yemen, which causes, you know, tensions in the Middle East. Any tensions in the Middle East is normally supportive for the price of gold. There are a number of oil tankers stolen by Iran. Iran have confessed to hijacking a bunch of oil tankers, and that reduces some supply of it. So heightened Middle Eastern tensions. You've also got the ongoing conflict in Israel and Palestine. So you've got a few tensions in the Middle East supportive for the price of oil. You've also got, you know, some tankers being seized, which decreases the supply of oil, all likely to prove supportive for oil. And certainly it's probably supposed, you'd have to imagine it probably continues into next week. But ultimately, if you look back a little bit further than that, it's been a bit sideways, but we're still working off kind of Christmas and New Year trades, so still need a week or two for these higher time frame charts to sort themselves out. As we get into the back end of January, they'll probably look a bit more tradable on the higher time frames. But pretty quiet week on the economic calendar has proved a pretty quiet week across the major asset classes. Certainly the US dollar hasn't done too much this week. Equities having a bit of an attempt to upside so far this afternoon. Let's see how the US session plays out at 2:30. But that's it for this week. We'll be back next week with a bunch more videos. Should be back to normal next week, and we will update further as and when we get to it. But have a good weekend, recharge the batteries, and we'll be back next week for another week of trading. Thank you.